Hello, everyone. Good morning, good afternoon, and good evening. If you are watching from anywhere else in the world, this is the first episode of we trying to tackle high time frame market direction or high time frame mastery, right? So basically, you would need to know two main things. That's fair value gaps and or let's say open low high close or open high low close, which would eventually mean that you will learn about profiling, right? So what's profiling? Profiling is basically we will try to assess whether the daily candle or the weekly candle or even sometimes the monthly candle, if you're going to go on a high time frame, would be bearish or bullish. So depending on what the profiling says, we will try to formulate the necessary trading for the day or for the week. Okay, so every beginning, right, of a new month, right, on the first or on the 31st of the previous month, you would start off by seeing the monthly candle, and beginning of the new week you would start off by seeing the weekly candle, and beginning of a new day you would start off by seeing the daily candle, because that's what you mainly want to see to assess the weekly or monthly or direction, right? But the basic principle is this is what we are trying to do. If we get on the right side of the market uh, while trading, then the probabilities of you hitting a take profit or TP is quite high, right? And that's why you need to understand the importance of fair value gap, because we will try to utilize fair value gaps more than um, more than order blocks um, for to assess the market direction, right? And swing highs and lows, right? So those are the basic stuff you would need to assess the market direction, right? Swing highs and lows, fair value gaps. But we will try to focus on fair value gap itself rather than order block and swing high and lows, um, because that's all you need to have a basic understanding. All right, so without further ado, let's crack on. Now, there are two main principles when it comes to fair value gaps, right? You need to keep in mind regarding that. So the first one is that a lower time frame fair value gap can be disrespected for a higher time frame fair value gap. Does that make sense? Right? Um, a lower time frame fair value gap is less powerful than a higher time frame fair value gap. Okay, I'll explain to you what this means on the charts. Okay. Um, Second is that there is also a place for inverse fair value gap, right? When a fair value gap gets disrespected, right? If you have a fair value gap here, and this is a bullish fair value gap, and you're looking for buys, if it gets disrespected, then you can utilize as an inverse fair value gap to understand where the next draw of liquidity is. Now, draw of liquidity, how do you understand? Identify the obvious draws of liquidity. That's a completely separate topic, which we will address at a different time. So do not stress on liquidity and draw of liquidity. If you guys need more help with that, please let me know on the general chat. So I'll be happy to make videos on them and explain to you about them as well. But this series will be mainly about high time frame market direction, fair value gaps, and stuff. We will not go into deep details about entries because that's not the topic for this series. All right. So now let's go through the price action and then try to understand what's happening, right? So we are on a monthly time frame. Price is fractal. I will go through the weekly time frame as well. Um, each and every month or day, week, what you do, you assess the whole structure. You can see NAS 100 is quite a bullish pair, right? It's quite a bullish pair overall through the history, especially if you see the monthly time frame. And you try to focus on the most recent price action over here. And what do you see? the previous month in May had been bullish, but in June you can see the high of the month had been swept and closed bearish, right? Swept and closed bearish with a bearish power, although there's a high wick over here. Now, when you see this do in June, when you get into trading on the 1st of July, you would mark the monthly fair value gaps, right? You mark this one. So if you do not know what the monthly fair value gaps are, how to mark a fair value gap, then I don't think this is the right video for you, because then you would need to go through the YouTube to understand what a fair value gap is, what an imbalance is, and then go through those videos, because that's the basic stuff, right? So I don't think this is the time to discuss that. So if you do not know what a fair value gap is, then you can just Google or YouTube some basic videos and you'll have the understanding. All right, so we have marked a monthly fair value gap here. We also have marked a fair value gap over here, right? So there are two different fair value gaps. Now, what does this mean? Price has closed bearish. There is a possibility, right? It's always a possibility. You cannot promise. Price can easily respect 50% of this wick and push up. That's how stories are, right? That's how it always will always happen sometimes. And that's why it's important for you to go through the weekly and the daily before you come to that conclusion. But on a monthly time frame, what do you see? Close bearish. So you can at least target this level, right? So from one candle high to the other candle low, right? This level. But price can always drop down from here, tap into this monthly fair value gap and go up, come down, tap into this monthly fair value gap and go up. Okay, because those are the two only scenarios, because we know fair value gaps will respect or disrespect price. If it now understand, if this fails to hold the price, this fair value gap fails to hold the price, why is it doing so? Because it's coming deep to mitigate into a more deeper fair value gap on the premium zone, right? If you look at the structure, this is the low, this is the high. So when you look at this whole range, what's more in the premium, what's more in the discount, sorry, so what's more in the discount? This fair value gap, right? Now, am I relying on the FIP too much? Am I relying on the discounts and premium zones too much? Not at all, because sometimes price can do this, and that's why when price does react from here, you need to switch into weekly, daily, 8-hourly, so on and so forth, right? The time frames for you to understand, right? Now, what happens on the monthly time frame at the end, right? You can see the bearish price action starting, gradually creeping into it, and eventually reaching this monthly fair value gap and having that reaction. You saw how all that while price started from here, dropped it, and sells all the way down here. And most people will get into the trap of trying to look for buys all the way here, right? That's well, you can look, but at that point it will be short-term counter trade buys, right? But pro would be sells. Now, once price reaches here, right? Once price reaches here, you need to understand, okay, this is a key area for reversal. That's when you start to exercise more caution into trading, and when you drop into lower time frames for you to look, right? Now, however, once price taps into this fair value gap, this fair value gap becomes irrelevant for us. Now, this is the main key fair value gap we are looking at, and this is when I told you, right, guys, we have mitigated the most deepest monthly fair value gap. So understand about me telling you about this, right? A higher time frame fair value gap is more powerful than lower time frame. What does that mean? On the lower time frame, NAS 100 disrespected the weekly fair value gaps, the daily fair value gaps, the 4-hourly fair value gaps, the 1-hourly fair value gaps. All that to mitigate a higher time frame fair value gap, and that is the monthly fair value gap. That's why it disrespected everything on the lower time frame to come and fill in the volume, or the early buyers trapped into it, right? All the stop losses being swept into, for whoever the swing traders entered into buyers, right? Targeting 1:1. That's what retail traders would do, right? Fine. So it swept here, and that's when I realized, okay, listen, guys, it has taken the relevant liquidity. If you go through the freebase channel or the daily chart analysis I would have posted, right, monthly fair value gap has been mitigated. Now we are looking at potential all-time highs again, right? We are looking at potential all-time highs again because we have tapped at the weekly fair value gap. And what does the price do every time it taps a monthly fair value gap or a weekly fair value gap? You can see on a higher time frame, it comes here, mitigates this level, pushes up. Now, of course, price did not reach this level over here, right? There is a different reason for it on the lower time frame, if you guys understood. But price filled into this, swept this low, right? Swept this low and closed with a rejection, push up, and then you could see finally price action doing this, and that's when I realized, okay, we are gearing up towards a high time, all-time high, right? So these two, and then I think this is time to speak about the other thing, confirmation. So confirmation on fair value gaps, right? A weekly fair value gap confirmation would mean you need to see, so let's start with monthly, sorry. A monthly fair value gap confirmation would mean you need to see a break in daily structure, right? I'll tell you what this is later on, right? If you're on a weekly fair value gap, you need to see confirmation in 4-hourly structure. If you're on a daily fair value gap, you want to see confirmation on 1-hourly structure. Everything else less than this is very fractal, and the lower the time frame you get into, the higher the risks of it being irrelevant, right? The risks of being incorrect, or false positive is wrong, right? So got a 15-minute fair value gap for the 4-hour. Yeah, so 15-minute for the 4-hour. Sorry, and this should be 1 hour, right? And if it's a 1-hour fair value gap, stick to 5 minutes. So that's where you would get some sort of a confirmation. If you want to look into something to identify whether the price is reversing. So what does that mean? Once we are at a weekly fair value gap, monthly fair value gap here, what you want to see is price sweeping the low and breaking above, right? So you need to see a sweep over here and then closing above. So a body closure is what you want to see. So if you're in a monthly fair value gap, you want to see this happen on what time frame? As I've explained here, a daily time frame, right? Then you could anticipate price to push down and go up, right? Simple as that. If you're on a weekly fair value gap, if you're expecting the price to become bullish on the weekly, if you think the low of the week is created, which I will discuss on OLHC or HLC video, then you want to see a 4-hour break happen like this. So then you'll know, okay, weekly has also turned bullish now. If you're on a daily fair value gap, you want to see the 1 hour do this, right? So everything is fractal, and as I've explained you, those are the two scenarios where you would expect the price to do that in order for you to have an understanding, right? Fine. Now, once you see that, that's on the weekly time frame, and then you can see what happened on monthly time frame, and you can see what happened on the weekly time frame, right? Now, what do you see here? What do you see here? Price is also at a weekly fair value gap over here. All right. So weekly fair value gap here. You can see price how is dropping all the way down there at a weekly fair value gap, right? And this is the monthly, which I showed you, and I said, okay, this could be the low of the month. We're looking at potential highs over here. Now, you could ask me the question: can the monthly, can price come into these fair value gaps and mitigate? Right? Ask yourself the question: can it come deep into these fair value gaps to mitigate? Of course, yes, it can come deep into this structure to mitigate, right? And that's why I told you why it's always not the best thing to rely on the fib or the 50% of the range, right? Because if you do that, right, look at that. If you do that and you're doing the drawing up the fib and then saying, oh no, price can still drop down deep into this 50%, we are still not at the discount range. Why are we looking for a reversal? Understand that it will not always come into that deep of a discount range for the price to reverse. Price can reverse from here, price can reverse from there. It will not always stick to what you want the price to do, right? So that's why it's always important for us to react. Now, when price is in this monthly fair value gap, let me just remove this, right? It is also in this weekly fair value gap as well, if you can see. Right, this is a weekly fair value gap. So we are at a weekly fair value gap, we are at a monthly fair value gap, and you see a big bullish rejection with a close. Right, now you should understand, right, this could be the low of the month. Price is going to target all the way up here. Now, what is stopping? What is stopping? So if you're in a bullish trend, what could be the possible roadblocks? If you're on a bullish trend, the roadblocks would be bearish fair value gap. Okay, so that means we got to open another box. So let me type that as well. Right, understand this one as well. Very, very, very important. So roadblocks. Okay, so if you're on a bullish trend, roadblocks for reversals would be higher time frame bearish fair value gaps. Remember that it's higher time frame bearish fair value gaps. If you're on a bearish trend, right, then it will be higher time frame bullish fair value gap. What does this mean? Right, what does this mean? Fine, I think this is a video screenshot if you want to take, but yeah, so because we are coming from a monthly fair value gap, the only thing that can stop is a higher time frame fair value gap. So monthly fair value gap on the left, or something else higher, like a 3-month fair value gap, right? If you're coming from a weekly fair value gap, which is from here, what can stop the price from being bullish, right? What can easily, react here and drop down? React here and drop down. Is anything from the same or higher time frame. So the weekly fair value gaps or the monthly fair value gaps. So we already know there are no monthly fair value gaps here. Now, you cannot see any kind of weekly fair value gap. Can you see? Everything is mitigated. Everything is mitigated. There's no volume imbalance here. There's no fair value gap here. What does that mean? That we are potentially at a reversal And all this needs to be taken. All that is liquidity in my eyes. So there is nothing for the price to ideally stop and pull back down when you have a confirmation for a reversal. So then what about the lower time frame ones? That is the daily fair value gaps. What will they do? Understand market moves as high, low, up, down in this fashion, right? It's going to create highs and lows and pullback, sweep of liquidity and all those stuff. So the lower time frame fair value gaps, whatever they are, for example, these ones, what's the lower time frame for the weekly is the daily, right? So you could mark that. So I usually mark my daily as green. So that is a daily fair value gap. What else? And these ones as well. It's a small one over there. You can see why the price reacted from here. But anyways, so that one. Anything else you could see? Yeah, we got a small one over here. These are going to be big fair value gaps on the lower time frame, such as the 4 hour. Anything else, nothing. And that's why I told you that the whole area looks liquidity for me, right? It's awaiting to be taken because there's no daily fair value gaps to even cause a pullback. So the only thing I could see is this one, which is why I marked and said, okay, listen, we can create a pullback from here, but these will be pullbacks. Are these going to be reversals? No, they're not going to be reversals because we are coming from a weekly fair value gap. We are coming from a monthly fair value gap. So anything lower than that weekly and monthly will just be pullbacks, right? That's the ideal scenario. Of course, things can, they're not 100%. They can go wrong. That's what trading is. But we need to have a proper plan and idea. That's why I told you at this point that all of this is liquidity in my eyes. We are gearing towards all-time highs again, and we will mainly switch our bias now to being bullish. Why? Because we see weekly candle swept the low, right? Swept that low, closed bullish. Now we are looking to target price action over here, bullish. So very beautiful. Our final target would be here. We will be looking, but we're not going to hold all the way up there, right? We're not swing traders. Of course, you can hold a small position on your personal trading if you really want it, but the main target would be, okay, our first target is this high, but before that we would also target this high. Why? Because we have a daily fair value gap. This is a potential area for the price to reverse. Now we have closed from here, right? That's where the price closed. So the next week you look for buys up until here, right? Buys up until here. Now open, low, high, close, which I'm gonna teach you next week what you're gonna anticipate if you're looking for a bullish week or a bearish week. That will solidify things more. But the whole idea is what we're looking for buys here, right? So just to give you a teaser into what I'm gonna teach you next week. So you can see here we're looking for a bullish week. Open, price went low because we're looking for a bullish week. Went low and high and then close, right? Simple as that. But yeah, so coming back into fair value gaps. So our main idea is to look for buys up until here. That's when you realize, boom, right? We're looking for buys up until here, boom. That's the main thing you want to get involved. And how do you get involved in it? In lower time frames, right? 4 hours, 1 hour structure. And remember, I told you about, if we are at a weekly fair value gap, ask yourselves this question, right? I wish I did this video live so I could see your response. But if we are at a weekly fair value gap, what kind of a break do we want to see? Remember the chart? Remember the chart, right? We want to see 4 hour break. That's why we are at a 4 hour. We want to see a 4 hour break. If you got any confusions, drop into the line chart and you can see. Right? 4 hour break. High. This is the low. Sweep. Break. Now this becomes the protected low. This becomes a protected low. As long as this low is protected, this low is not swept, right? I can anticipate price to drop down here, do whatever it needs, and then push the price up. Simple as that, right? Simple as that. I'll explain to you, I'll show you a most recent example for that, but that's it. Now, everything else, right? Price, what has price done? Very beautiful, look at that. Mitigate a 4 hour fair value gap. Fill in that volume, boom, gone up. Now you can ask me the question, can price drop down here? Yes, of course it can drop down. But imagine if you waited until price dropped down this low. Oh no, let's get the fib out. Let's mark the premium and the discount. This is the range. This is the discount. I'll be waiting until price comes back here. You're going to wait until next year or next decade for the price to make that pullback, right? So understand, for you, it's not about waiting. You wait, watched, you look for a confirmation. Again, if you add the 4 hour, what do you need to see for a confirmation? Usually M15, right? Remember the chart I told you. Remember the chart I told you. So M15, where do you find the confirmation of M15 here? This is the low. Low had been created at a New York time, which is an ideal setup or more confirmation that this is going to be a true low. This is the high. So we've got the low, swept, complete break. You can see here a break. We've got the confirmation this is going to hold, and boom. This day you can trade whatever it is. So that's on the lower time frame. So I'm not going to jump into entries and stuff. But can you understand that each and every time frame is synced, and you need to see a low created, push up, low created, push up, and we're going to target into this. So this is the target. After this, you can still trade into this high, which is our weekly draw, right? Remember, first target and the second target is that weekly candle range high, this one, low, high. So this is going to be our next one. And ideally what you would want to see on a daily time frame, right? Remember I told you about inverse fair value gaps, right? If this becomes disrespected, closest above, we can utilize this as an inverse to catch buys rather than catching sells. Why? Because our pro direction is buys, right? That's important for you to understand. Now, if you're going to look for a, on a bullish trend, this is what most people do. On a bullish trend, what they do is, okay, they mark a bullish fair value gap, right? They mark a bullish fair value gap, and then this becomes disrespected, right? On the lower time frame. On the lower time frame, once this becomes disrespected, oh no, now this is an inverse fair value gap. Let me take a sell, and they intend to sell. What happens? They get choked out, right? They get choked out. Why? And then say, okay, no, but I thought this was the inverse fair value gap. Why didn't the inverse fair value gap work? Because, my friend, the higher time frame is bullish, and price has dropped down over here for something that you're not able to see, a more higher time frame fair value gap, or an order block, or a swing high and low, whatever it is. So do not rely on inverse fair value gap blindly if you do not understand the high time frame market's intention. All right, so once price crosses above this, what you're going to do, you're going to utilize as an inverse for you to catch the move. And what happens? Look at this, how beautiful it is, right? Closed, boom, and pushing price up again. This is the a small teaser of what I'm going to discuss next week. Open, low, high, close, right, close. Daily candle, you're expecting a bullish week, bullish day. So open, low, created the low, and boom. Now, for you to understand, because this is a big range, right? It's a very big range. So for you to understand where would this low be created, that's when you utilize lower time frames, right? You go into 4 hour. And come on, is it a difficult thing? Is it a difficult thing for you to understand? It's a 4 hour fair value gap. How beautiful it is, right? This price action, how beautiful it is, and that's all you need at the end. That's gonna push price up, and boom, that's your whole week done. Your whole idea is done. Understand, for you to become profitable, you don't need to switch to M5 and try. You don't need to try to catch this move saying, okay, that's all I need. Lower here. I'm gonna target all the way up here. That's not what you need. What you need is something simple on the 15-minute time frame or the 1 hour. I'm not telling that you cannot do it. You can definitely do it, but you need to get to a stage for you to be able to see price action on lower time frame. If you cannot figure out price action on the higher time frame, on the 1 hour or the M15, how are you ever going to read PE on 1 minute or 5 minutes? Right? Ask yourself that question. So all you need to do is have a bias. Right, my main goal is for the price to reach there. I think the price has created the low of the day. Let me just target 1:1, and that's it. That's it. Am I gonna be bothered that I missed this whole move? No. Price could easily do this and chop down, and then could have done that. So that shouldn't be your problem, right? You risk to pass your account, not to be right. Understand, market doesn't care whether you're right or wrong. It only worries whether you're making money. That's it. Okay. So same thing. That 4 hour you can refine it to this 1 hour. Right? 1 hour is a Asian mark with yellow. That can be refined into this 1 hour. It's so beautiful. And this happens at the Asian kill zone. Look at that, right? Remember the chart I posted, right? 2 a.m. 2 a.m. That's the Asian kill zone. That's when the low of the day is created, and boom. Very, very beautiful, guys. If you understand how price moves with time, that's why I got time, price, and liquidity. It's really beautiful. Okay, so now understand another thing which I want to say, right? Price is a fair value gap is not disrespected until that weekly candle or the monthly candle closes. What that means is, so when you're on the weekly time frame, right? When you're on the weekly time frame, for example, so this week opened, see, it's going to create a bearish wick. How it went up, now it's coming down, right? Boom. Until this weekly candle closes below this weekly fair value gap will not be disrespected. Same way here, right? At some point, yes, you would be able to see this weekly candle, right, completely like this in a bearish fashion. But until the weekly candle is closed, you will not say whether it's respected or disrespected, and you could see how it respected that fair value gap, right, at some point. So that's why it went there. And it's very beautiful, right? So that's when you saw that happen, and then the whole weekly candle goes this, and we expected another weekly fair value gap, weekly candle to be like this. So our draws are still over here. Price can hover around, right? Price can hover around. That's what it is, guys, right? Understand that lower time frame fair value gap, that is a daily, for example. Why were the daily fair value gaps on this side being disrespected? Why did this daily fair value gap get disrespected? See, this is the one I was telling you about. Right? When this happens, the example I told you about. Okay. There you go. So when this daily fair value gap got disrespected, you can utilize, because this has become an inverse now, isn't it? Look at that. This has become an inverse fair value gap because this has closed below. So what you can do is tap in and look for sells, right? Simple. Now you can look for sells from here, but until when? Until a higher time frame fair value gap, because I told you a lower time frame fair value gap, which is the daily, can get disrespected to mitigate a higher time frame fair value gap, which is the monthly. So this daily, monthly has not tapped here yet, so this daily got disrespected for you to tap into this monthly. So you can utilize this daily. So on this day, when you're coming into the Wednesday, the 29th of July, you're looking for sales, right? You're utilizing this daily fair value gap, looking for sales into this monthly. So what happened? Boom. Beautiful, right? That's it. That's all you need to know. That from that move to here, that's it. What price is going to do after this is not going to be a problem. But once it taps into this monthly fair value gap, now what you need to remember is that, okay, price can reverse at any point. Is it useful for me to look for sells now? Okay, what I'm gonna do, okay, I'm gonna mark this daily fair value gap over here, the tiny eeny miny one. I'm gonna look for sells from here. No, that's wrong, because the price is now coming from a higher time frame bullish fair value gap. This is at a point of potential reversal. Remember the word potential. So there's no point in you catching sells from here or you catching sells from here. Of course you can, but it's gonna be very short term, a high risk sells, right? So that's why I wanted to explain about using inverse fair value gaps, but until a liquidity area is there. Okay, so coming into next week, right? What you do coming is at the beginning of every week, you mark the fair value gap, so you can see a weekly fair value gap here. What's our potential draw? We have our first draw over here. Yes or no, right? We have a first draw over here. We also have potential draws over here as well. So we're expecting a bullish week. We have draws all the way up here. Of course, candle can open and go anywhere it wants, but we should understand that, what did I say? This is a weekly fair value gap, right? Gray is weekly or monthly. So if this is a weekly fair value gap, what did I tell you? Lower time frame fair value gaps can get disrespected to tap into a higher time frame fair value gap. So after weekly, we go into daily. We do have a daily fair value gap here. So of course, price can do this. We've closed here and push up. Okay, that's what I would ideally want to see. That's why I don't want to see any deeper mitigation. However, can price do this? Of course it can. Why? A lower time frame fair value gap can get disrespected to tap into a higher time frame fair value gap and push up, right? So our job is not to predict every move, but look for potential areas, mark and keep at the back of the head. Okay, these are key areas where the price could reverse, right? But we would look for time, price, liquidity, or let's see, confirmations of the lower time frame for you to enter into trade. That's why fair value gap is important, but it will only form a part of the strategy, right? Fair value gaps we use to understand the market direction. Is price does the price need a deeper filling into this area for the price to reverse? No. Is this fair value gap itself enough? Of course, that is enough. We also can mark this key level, which is a daily order block or a key structure. right? Those are all key levels, but our main targets would be this one. Now we also have a rejection block here where we could see um, potential pullbacks, right? These are pullbacks. I don't expect a big reversal, but you know how people will target until this high. Oh, that's a high. That high needs to be taken before reversal, but that's when these rejection blocks or resistance levels, if you have done SNR. Now I'm speaking in all terms here, right? That's because I basically traded all of them, and we are trading a hybrid concept here, because we know ICT, we know SMC, especially people inside premium, we know SNR, support and resistance, we know LITs, right? Liquidity inducement theorem concepts. That's where we learned about the timing and the liquidity stuff. But that's why everything needs to come in together, right? That's when it all clicks, right? So those are potential areas where the price could give pullback. But going into next week, our main bias is bullish, and you could look into the lower time frame as well if you really need and understand what we're going to do, right? And what's important is, remember me marking this for a fair value gap, right? Go and see the free trade ideas group, and I told you buys are pro once it slips, and look at that, just like that, right? For a fair value gap, boom, right? It's very, very beautiful, guys, very, very beautiful. And what happened on that New York session? Now, because we had a 4 hour, ideally you would want to see a 15-minute break, but 15-minute break is all the way up here, so it's not realistic. What you could see instead is lower time frame fair value gaps, a 15-minute fair value gap getting disrespected. Right, this comes into my last thing about fair value gaps. The last thing which I want to teach you about fair value gaps. Right, the earliest sign for a potential reversal in a fair value gap is a counter direction fair value gap being disrespected. What does that mean? Listen to it again. The earliest sign that a potential reversal could be happening is disrespecting an opposite trend fair value gap. We are at a 4-hour fair value gap. For us to confirm that a breakout is happening, a market direction change is happening, we need to see a break over here. But that's a long break. What would be the earliest sign? Earliest sign is to mark the most recent fair value gap. This is the most recent M15 fair value gap, which we mark in blue, right? Most recent M15 fair value gap. The earliest sign is to see this getting disrespected. Then this could form a protected low. Understand, an earliest sign is not a confirmation. You could easily see this happen. But, right, we trade probabilities, and probabilities are high. Why? Because this is quite a big structure. We cannot wait until this disrespects. This become inverse. And that's why if you see me, Marshy, DJ, all three of us were in buys. Why? The late towards the Friday session, if you go see the indices channel, right? Why? Because we are at a 4-hour fair value gap. Price action is bullish, right? Price action is bullish. M15 got disrespected. This we thought as a a protected low, right? This we consider as a protected low. And simple, you target 1:1 hour until you are proven otherwise, right? Until you are proven otherwise. And where did we target, right? This is why I told you price action is fractal. You target the same thing. We are coming from a 4-hour. Remember me talking about roadblocks? Come on, guys. Remember me talking about roadblocks? What is this? Bullish trend, high time frame, bearish fair value gap, bearish trend, high time frame, bullish fair value gap. So we are in a 4-hour fair value gap. What's gonna be our roadblock? What's gonna be our roadblock? 1 hour fair value gap. Beautiful, beautiful, beautiful. Anything else on top, there is no 1 hour fair value gaps on top. So this is the last thing. If price wanted to reverse, because Friday evening session, if price wanted to reverse, this is the last thing that the price could reverse. That's why we are from a 4 hour, you trade into the 1 hour. You only need to catch this small move, guys. Remember, I'm telling you again and again, you only need to catch a small portion of the pie, not the whole pie. You don't need to catch the whole move from here to here. We don't know what price action would do. Which is the obvious move? This one. And that's all we caught from a 4 hour after confirmation from M15 up until low time frame fair value gap from here to here. That's all you need to become a millionaire and be profitable, right? Understand that. If at some point, if you guys understood it, if you guys can process that, then for sure you're going to be successful in this journey, right? I will try to post this as a screenshot so it's easy for you guys to process it. If you watch up until this video, right, up until this end, then that means you are eligible for a giveaway, right? All you got to do is that if you watch patiently up until this video, that means you're one of those active listeners. That means you haven't given up. I've been yapping for almost about 46 minutes now. That means you haven't given up trading, which means you deserve a giveaway, right? So all you need to do is keep quiet about the giveaway because otherwise everyone's gonna do the same thing. But if all you do is keep quiet about the giveaway, but react to this video with the Go resource emoji, right? You can react to any emoji you want, but if you react to this video with the Go resource emoji, by the end of next week, that's Friday, by the end of this coming Friday, if you react to this, your name will be eligible on a completely random draw to win a 50 USD gift card, right? Any voucher you want, with its Google, Amazon, Netflix, I don't know, any voucher you want. Why I do gift vouchers? I think because that's easy for me to give it, because some of you are not from the UK. It's hard for me to do a bank transfer, so you will be eligible for a $50 gift card of whatever preference you want, right? So make sure you react to it and then keep quiet, and because the more you keep quiet, the more chances for you to win the giveaway than the others, right? If you talk about it, that means you're going to reduce your probabilities of winning it, because then more people will react with that emoji without even watching the video until the end, which is going to be unfortunate, right? I hope this is useful. If you think this is useful, let me know in the general chat so that I'll be able to create more detailed videos into it. This is just a superficial, this is the tip of the iceberg into fair value gaps. There's more detail into this. Let me know what your questions are. Test it out on the low time frames as well, and then hopefully we'll see you with another video, right? Cheers, bye bye.